Hello, everyone. I'm Matthew Jarvis, a certified financial planner, and you're watching Tales from Retirement, where we share real life stories from real clients with their identity protected and some small details changed to help you improve your own retirement. In today's short talk, we're going to talk about Lucy, who was able to save $200,000 in taxes to the state of Washington, not the IRS, but to the state of Washington through some planning that we were able to do together. Now, Lucy approached us some time ago asking for help with her parents who found themselves in their 80s and unable to manage their finances any longer. This is a somewhat common story. In putting together a net worth statement for Lucy's parents, we discovered that they had accumulated through years and years and years of diligent savings some $4.5 million. Now, at first, this might sound like a lot of money, but when you add up a couple of homes in the Pacific Northwest, a lifetime of retirement account savings, and other diligent savings, that number accumulates fairly quickly. Now, thankfully, Lucy came to us because her parents, like most people, had a will that said, if I pass away, everything goes to my spouse. And when we're both gone, everything goes to our children, in this case, Lucy. The problem with this is that in the state of Washington, if you pass away with assets totaling more than about $2 million, anything above that can be taxed as high as 14%. Now, you might think, well, $2 million, the husband gets $2 million, the wife gets $2 million, that's $4 million. This couple is pretty close to the limit. That would make sense if this wasn't the government. But because this is the government, what will happen instead is that, let's say the husband passed away first, which is what happened in this case. All of the money goes to the wife. She now has $4 million in her name. When she passes away, had nothing been done, her daughter Lucy, our client, would have owed some $200,000 to the state of Washington, in addition to any other taxes they had paid to the IRS, to the federal government. Thankfully, as I mentioned, Lucy came to us. We were able to change her parents' estate documents with the help of a very competent attorney. We were able to do some gifting to Lucy. And sadly, a short time later, her parents did both pass away within a few months of each other. And we were able to completely avoid this $200,000 tax to the state of Washington. Now, keep in mind, we were able to avoid this by doing what we'll call mainstream planning, very black and white. This isn't some kind of bizarre, let's hide the money, let's set up an offshore trust type of things. This was, let's make sure the accounts are put in the proper name. Let's do some gifting to Lucy. Let's set up some trust, whatever we need to do. And there was a little bit of legal cost. There was cost to us as the financial advisor, but it paled in comparison to the $200,000 of estate tax or death tax we were able to save. So let's translate this to you, dear listener. The first thing that you need to do, regardless of what you think your net worth may be, is create on your own or have someone create for you a net worth statement. This does not need to be complex. It can be done on Excel. It can be done on a piece of paper. We want to add up everything you own, your home, your investment accounts, your retirement accounts, cash you keep in the bank, the value of your cars, any collectibles. Don't worry about small things like the desk in your home office, but anything big, we want to add that up. If that balance comes anywhere close to $2 million or somewhere north of that, that's where you need to meet with a very qualified financial advisor and an attorney to make sure that you're set up in a way that you will not be paying extra taxes to the state of Washington. These steps that need to be taken are not necessarily complex, but again, the price is quite high. So take a minute to do your net worth statement or find someone who can do that for you. If you are over that limit, congratulations, you've done a great job saving. It's now time to start taking steps to reduce this tax for yourself. If you found this episode helpful, please take a second to like and subscribe. That really helps us spread the news. Also, feel free to forward this to someone you know or care about who might, in fact, be over the limit themselves. Of course, this is largely applicable to people living in the state of Washington. So again, if they live in Idaho or Oregon, this is going to be less applicable. And if you would like to find a certified financial planner who can help with your needs, who understands the intricacies of the Washington state estate tax, visit talesfromretirement.com. That's talesfromretirement.com to get connected with a certified financial planner near you. I'm Matthew Jarvis, and until next time, happy planning.